GBP USD in 60 seconds. Geopolitics. The war pushed markets into a risk-off environment, sending capital into the US dollar and dropping GBP USD from 1.38 to 1.32. With a ceasefire announced, the fear is easing and GBP is now recovering and sentiment shifts back towards a risk-on market. Positioning. CFTC data shows speculators are heavily short GBP while institutions are net long, so the market is leaning bearish, but bigger players are accumulating positions which can fuel upside moves. Right now, the institutions are buying all the retail positions. Best rates and expectations. The UK was expected to cut rates from 3.75% to 3.25%, but with inflation still above 3%, those cuts are now being questioned. The US is also at 3.75% interest rates, but with a stronger economy, they have an easier path to cutting rates. Inflation, employment and growth. The UK is dealing with high inflation and weak growth, a stagflation setup with soft employment and weak consumers. The US has slightly lower inflation, stronger employment and more stable economic activity. Presentations and speeches. This week is key with central bank communication. We hear from multiple speakers in the US bank and speakers from the UK. Markets are watching for any shift in tone, whether central banks are going to lean towards holding rates or preparing to cut. The bottom line is short-term GBP strength from sentiment and positioning, but USD remains fundamentally stronger, and this week's data and speeches will shape the next move as to whether we're going to be bullish or bearish in the future.